How we doing, guys? Ready Set Crypto here, coming to you. Ready Set Live. It's Wednesday, January 8th, and we're excited to talk about some interesting topics going on in today's market. Certainly has some volatility in the past 24 hours, so let's get things kicked off. Doc, take it away.
Hey, how's everybody doing out there? Good to see you guys. Now we got people debating technical patterns in the chart room. Where are you guys coming in from today? Where's everybody logging in from today? Let's hear you guys. I am coming in from Greenville, South Carolina. Another sunny day in the 60s. I'm having to pinch myself. This weather is so nice. Mab, you are coming in from what, LAX?
Not quite. Yeah, I'd be a lot more remiss if I was coming from LAX. No, I'm in Los Angeles. It's
Pretty close.
Also a pretty nice day here, so can't complain. But yeah, where you guys? Philly. All right, I like Philly.
All right, we have South London, Romania, Bucharest, Phoenix, Arizona. Let's see where else you guys are coming in from. Ontario, Canada. I've been as far north as Nipigon, which is that was a lot of fun. That was very cool. Let's see, Woodland Park, Colorado, Lithuania, South Africa. Highly weird. Tejas. All right. There we go. Man, I can't get enough of those commercials with that dude. What is he now? He's ice fishing.
Yeah.
Coming in from coastal Maine. I love coastal Maine. Like all the other tourists up there up at Bar Harbor.
Bahaba.
Love that place. Philadelphia, West Virginia, Malibu, El Paso, Tejas. And we have Greece. All right. Would you guys like to talk a little charting for a while? A little bit of charting. Mav, you got something that you're going to tee us up with?
Yeah, in a bit, but let's talk charts.
Okay. All right. I wanted to tease that, see if we could get people to stick around here. So let's do a little screen sharing here. We're doing this a little bit opposite of what we used to do. Mav is driving the bus today. All right. So hopefully you guys can see what we got here. This is Bitcoin versus the US dollar on Bitstamp. And you guys can see this little rally. Now, we did have a little inverted head and shoulders. I know you have to kind of like look at this sideways to see it correctly. So this is an inverted head and shoulders. We had a nice higher low. When I last talked to you guys, we were talking about the possibility of retesting 6,500. It stopped short of there and started to rip to the upside. So that's good. Now, with an inverted head and shoulders, there is what's called a measured move here. So if I take this manly pink line here, and if I measure the distance from the bottom of the head formation to the neckline here, and this is approximately the neckline, then I've got a measured move target, which is up in this area. So there's no law that says that it has to meet that measured move, because I think what we're running into here is overhead resistance. Let's go ahead and reset this chart. We have this trend line comes into play. Now, guys, there's nothing magical about a trend line. Just because a trend line is there doesn't mean anything. However, what it does is it gives people sort of a frame of reference to be able to say, okay, I'm going to take profits as the price gets up to that trend line. So if you're long, if you got the breakout on the inverted head and shoulders, you're going to take profits up there around 8,400. Or if you want to initiate a short position, that's a good place to put one on. You want to sell rips and buy dips to be successful in the market, which is exactly the opposite of what you think you want to do. Now, a lot of people are going to ask, is this the bottom? Is this it? Is this the move? Is this going to get us out of the bear, this nasty little corrective bear that we've been in really since last summer? Again, first of all, let's do a quick reset on that, because I think it's important for us to look at the larger picture here. And if we look at the larger picture, and I do have a bunch of lines up there, but this is still the larger picture. So until we break 6,500, this is still in place. But I guess what I want you to understand is that just because we've slipped into another bear here, don't forget that the larger picture is that we're just in a big, massive consolidation pattern right now. And if we do slip 6,500, it's okay. It's not the end of the world if we come down to somewhere in this area. Maybe even if we retest this pivot. I don't want to see that happen. I don't think that would be constructive. I don't think we necessarily need to do that. But staying within this pattern until this thing is ready to go is, I mean, this is normal market structure. So again, that's the very, very top level of what I'm talking about. If we go down to the weekly chart, we can see that we still have, I think we're done with this little pink line here. This is still, this is not what I would call a bull flag. A bull flag is normally something that looks like this. So a bull flag is going to have a flagpole on a very strong rally, and then we're going to see a small contained consolidation, just long enough to let this thing rest, and the bull flag forms a halfway house into the next measured move. All right, this is not what this looks like. So right now, I think what we're looking at is just a larger time frame pattern that is regulated by the monthly chart, and we've sort of stepped into another one of these things here. So no time to panic for this, but don't be surprised if 6,500 does let loose. Now, if we expand out this weekly chart just a little bit, okay, if we expand this guy out here, notice that it's still a weekly downtrend. So until this downtrend is broken, you can expect the price to continue going in the direction of the downtrend. You guys have ever heard me before I talk about the 4 rules of fractals. Rule number 1 is that larger time frames dominate the trend. And until we get into a higher low, higher high combination with the weekly chart, we're going to continue to see this. So this is not a matter of me, wearing my emotions on the sleeve. Like, I'm like with the rest of you guys. I want this thing to go higher. I want everything to go higher. I want this, 100,000 Bitcoin. I want to save John McAfee's, his life. Let's put it that way. I want to do all of that stuff, right? But I have to be honest that this is still in a weekly downtrend. You can't trade the market that you want, only the one that's in front of you. So until that weekly downtrend goes away, we're still going to be under the gravitational pull of this little bastard here. Okay, so what else am I seeing here? The one thing I am not seeing is volume that's accompanying the move. Let me squish this together and let me give you an idea of what I'm talking about here. Price and volume really forms the basis of everything. Notice the bottoming volume down here. People were accumulating like crazy down in this area. Notice also the volume spikes as we got into the spring summer move. Okay, these were awesome. These were people chasing after things. A lot of pain was involved in this volume. Also, a lot of pain was involved in this volume as well too. What are we not seeing here? Nothing. There's nothing. This is not reversing volume that's happening here. It's going to take a lot of volume to bust this thing out of the pattern and back into this as well too. Now, also keep in mind that rule number 3 that I talk about is that descending patterns will eventually break to the upside. And that is true for this one as well too. However, there's another sort of pseudo rule that's out there that to go higher, you got to go lower first. Notice how to go higher, we went lower first on here. And this one did go lower a little bit, but this is not the kind of fake out move that I'm expecting to see. I want to see this thing really plunge. We have not had capitulation. This is the closest that we've had to capitulation. It wasn't really true capitulation. So this is kind of what I want to see is I want to see blood in the streets. I want to see these news articles over here, universally negative, like horrible, like this is the end of the world kind of thing. And that is when we will see the reversal from here. It's when nobody is expecting it. It's darkest before the dawn. So not much else to look at here. So what we talked about in Omnia customers today, what I talked about was a vertical spread down here, looking at a target between 7,500 to 77,000 or so. So placing an out of the money vertical spread using options is a very inexpensive way to speculate without having to deal with the overnight risk that, being able to set up a fixed risk position, I think is very important for this market because you don't know when you're going to have these news bombs come along and just blow your position out of the water. So using options in a spread format is, I think, the way to go in today's market. If you want to know more, let me know. And we certainly have some resources for that. So, Mav, I'm going to send it back to you, Migo. And there we go.
Cool. Glad to hear it. All right, let's make this transition as smoothly as possible.
Too late.
Yeah, hopefully. Oh my. All right. Cool. That looks good. All right. Forgive the small transition there, but yeah, I'm going to look at this from a little bit more of a fundamental perspective, not so much chart based, but sort of what's driving the markets, what's going on in the markets. So first thing to note is, oh man, what's going on? All right, there we go. First thing is that we've obviously seen Bitcoin in the last 24 hours go up to about 8,400, 8,300, depending on which exchange you're looking at. But certainly it started to cool off after Trump came out this morning and talked a little bit about de-escalation, or he didn't quite say de-escalation, but certainly there's this tit for tat, the Soleimani assassination compared to the response of Iran. Uh, it seems to be at a stalemate right now, but certainly tensions could escalate at the drop of a hat. So that's, I think, where the market's at right now. Is we're seeing the market start to, look at this, try to implicitly value what is uncertainty right now. Certainly in the last 24 hours, we saw gold break through a 6-year high. The last time it was at 1600 was in 2013. We saw crude oil jump up 4%. So, certainly there's been quite a lot of volatility, Bitcoin among them. But really, where it comes down to right now is the question of, does Bitcoin act as a crisis or macro hedge? Does how do things go from here, and what's going to be driving that? So definitely something we're watching in the moment. It's definitely something to I would say it's interesting, but at the same time, we can't look at potentially more escalation in the Middle East. People like to say World War III. I don't know if it's quite that level just yet, but we can't look at that as saying, oh, that's such a justification for Bitcoin and gold to be going to higher highs, because ultimately we don't want to have more escalated conflict in the world. That's not good for longevity as it relates to any sort of economic progress. Certainly in the short term, the volatility is helpful. Certainly people are trying to hedge their bets, but certainly I don't want to see things get any more heated than they already are. And I think both the U.S. and Iran feel similarly on that. So hopefully this is the start of some tense talks. But with Trump laying more sanctions on Iran, I do feel that Iran is going to feel more pressure, more heat, and certainly I don't think their populace has been abated simply because some missiles were launched. So we will see. But that's definitely, as we know it, where things are right now. Certainly, 2020 is getting kicked off in a very big way. Um, where last year we had the trade war sort of as the prevailing rhetoric, driving for or against Bitcoin. Now to have actual war be at the forefront, it's interesting. We will see. I think moving on, some other things we're watching is some of the Fed repo intervention, and how that's making history right now. And I know those words might glaze over some people's eyes, but the thing to know is that this is the biggest intervention in the repo markets by the U.S. Fed in history. Essentially, at this point, the Fed has done more to support the economy, to bail out the banks, to inject capital into the supply than ever before. And this, I think, for one, is very concerning because we are seeing all this capital injection when the market's going higher and higher. The S&P just printed an all-time high. Uh, this is very much in contrast to where we were following 2008, where there's blood on the streets. Uh, Not so right now, but for the Fed to be continually injecting capital, to be this to have this amount of capital be injected in the markets at a time like this, when we have historically low in unemployment, historically high stock market returns, it's concerning on many levels. And I think this is a very good contrast to Bitcoin, certainly in this year. With it being going through the halving event in a couple months, and essentially not needing to have capital injection justify its market, or the continuation of its market. So yes, very very interesting times to be had. We will see how the Fed treats 2020, if it feels the need to continue to support the larger markets and what that looks like. But certainly, we are definitely seeing modern monetary theory in practice, where there's this feeling that we can continue to print money ad infinitum, and there's no repercussions, because that just is it's implicitly up to the private sector to continue to make and take advantage of this out of control stock market. I mean,
If there's one simple way to keep your eye on the Fed, if you want to know which way the Fed is leaning, is to watch the 10-year note, which is ticker symbol Tango November X-ray. The 10-year note is, if it starts to drive lower, then the Fed's going to be under huge pressure to drop rates. But for right now, it's not doing that.
yeah, yeah. So other than on the surface, surface conflicts, trade tensions, actual physical border tensions, and anything of that sort. This is what we're watching as well, is sort of the market tensions right now, and how things are going to be adjusted, inflated, eased, etc. In 2020. Big things to watch, big glacial moments right now, but this is very important to keep your eye on. Other than that, I think one of the questions that's being raised right now is, why do people turn to safe haven assets during times of uncertainty? Why has Bitcoin developed this safe haven asset sort of narrative, even if it's only right now printing about a 0.15 correlation ratio to gold, which has historically been the safe haven asset of choice? I think it's really this contrarian sense to fiat currency is one of the biggest, for the reasons we just stated about capital injection and money printing, but also just as the U.S. dollar has lost more and more of its purchasing power, as the consumer price index has drifted lower and lower. We are certainly seeing gold continue to retain value, or at least serve as a hedge, simply for the reason that it's something that investors, governments, ordinary citizens, even criminals, they want something that they can count on. And in that case, in times of uncertainty, uh, precious metals, gold in particular, is something that they can count on, because it is anonymous, it is portable, and it holds value over time, and is accepted virtually everywhere. Obviously not as a transactional currency, but as a store of value. So these are things that we've seen repeated over and over again about Bitcoin. But notably, just because Bitcoin does not hold, a 1-to-1 correlation ratio with gold, as gold is going higher, it doesn't mean that Bitcoin is going higher every time. It doesn't mean that it's disingenuous to assume that, Bitcoin has to copy gold in every respect, in every effect. I think Bitcoin represents a very different type of a utility, a type of store of value, and the merits that back it are based on very different principles. There's many more things you can do with Bitcoin than what gold represents. Gold is, it's really not going to change much from what it is, nor is there going to be, some massive influx of supply. That's similar to what Bitcoin represents, but importantly, Bitcoin can change over time and things can be built upon Bitcoin and the Bitcoin network. I think that's one of the biggest assets that Bitcoin continues to provably show is that it is a decentralized network that spans the globe, that is borderless and permissionless. And certainly in a time of uncertainty, in a time of global, you know, tensions rising, that's something that becomes more and more attractive. So certainly we we want to watch the evolving narrative around Bitcoin as it relates to its ability to be a safe haven asset or at least a store of value. Something else that I want to talk a little bit about is my belief now that the Bitcoin's halving isn't baked into current prices. And this is contrary to a lot of the things even I have said in the past couple months, certainly around, well, everybody knows when the Bitcoin halving event is coming. You know, it's several months out, and that's everybody's got it marked on their calendar with a big red Sharpie, and it's like Christmas. But I think there's more to the story than just the event itself, and I'll talk about that right now. I think there's concrete evidence that intrinsically Bitcoin having events are not so much bullish events in of themselves. Extrinsically, speculatively, yes, they are. Yes, people speculate that, well, the price is going to go up, or I'm going to sell my Bitcoin at the halving. I'm sure everybody under the sun has some sort of plan as to how they want to respond to the halving or just to ignore it. But it's out there. People are aware of it. But instead, what I want to pay attention to is what really comes about after the halving event. That would be the fact that miners currently will have about well, they receive about 90% of their overall revenue from the block rewards. And to have that cut in half, definitely, it doesn't, I would say, affect the supply or sort of the demand in of itself right away, but it's something that plays out over time. That is pretty obvious if you pay attention to just the dynamics around mining and how over time we've seen in the past the halving events have led to higher prices. But I would say that you also have to pay attention to things like the Bitcoin options market. And at this time, it's not really priced in because there's no implied volatility term structure for the relevant expiry in June 2020. That means that the options market does not anticipate any sort of increased volatility around that time. I would say that may change over time, but right now, that's sort of the narrative that's taking place as I see it. So we will definitely see some volatility as it relates going up to and right at the event of the halving. But certainly, I don't think it's the bullish event that, in of itself drives things. As I've said in the past, I think the larger event here is the cut in supply, the cut in inflation rate, and the increased attention that it brings in of itself. Those are, I would say something that's going to affect the price long term more so than just speculation does. So hopefully that kind of makes sense. And hopefully this is something that we'll continue to explore as we get closer to the halving event. But certainly 2020 is, it's definitely a year to pay attention to for many different reasons, this being one of the big ones. Something else I want to quickly touch on before we take some questions. It's just some of the takeaways I've been paying attention to from CES, or the Consumer Electronics Show, from this year that's going on right now in Las Vegas. So the first big one I would say is the rise in computational power. And certainly, if you're a fan of computers or know anything about computer components, the rise of AMD has been spectacular in the last couple of years. It's been the biggest gainer among the S&P 500 for the second year in a row. And Lisa Su, the CEO, just gave a fantastic keynote for about 45 minutes where they introduced some of their new products, some of their new processors, and it's clear that they're taking the torch from Intel, and they're really charging forward in terms of their ability to put out new products, continue to stay competitive, and even becoming a market leader. So why this is important, I believe, is as it relates to Moore's law. this is something we've definitely seen uh, the nature of it become more complex, or there's been fears that Moore's law is slipping behind. And for those who don't know, it's essentially that it's an expression of computational power over time, where as devices get smaller, the necessary atoms are rubbing up against each other. There's quantum effects. It gets harder and harder to uh, double the amount of computational power for the same amount of size of central processing unit. But what's important about this is that we've basically stayed on track for at least the last 30 years since Moore's law was first speculated on. And I think where this is going to be certainly in effect is as computational power becomes cheaper and more accessible and more powerful. Certainly we aren't seeing the same sort of results that we were seeing at the beginning of this millennium back in the 2000s, but still we're seeing smaller and smaller dies, smaller and smaller central processing units, more mobile capable computing technology. This all lends itself to the ability to create a better distributed network that is more computationally secure through things like mining, but also just gives the ability to what is known as edge computing, or the empowered edge. And this is something I talked about in some of my speculation on what are the things that are going to be most important in 2020. Empowered edge or edge computing is really the fringe of any sort of network. And those IoT devices that, be it your smart toaster or your smart fridge, the fact that they're getting smarter, that they have more computational power, these are all devices that are on the edge of a network, represent the Internet of Things themselves. But as they get more and more capable of running AI units or doing things like mining or securing a network, this lends itself to the ability to better distribute the network and better secure it through computation. So yeah, it's kind of boring. I get that, but it's also really exciting to see how much technology is changing, how much it's advancing, and this is sort of the spear tip of our advancement right now in terms of computation. The second thing I definitely saw all over the place at CES is around 5G, and I've been reminded several times now that there's many dangers or unknowns about 5G. I think that relates to the millimeter wave 5G, but what a lot of people don't know is that there's multiple bands of 5G. There's multiple spectrums, or ways that it touches the spectrum. And so millimeter wave, which is direct line of sight, that's the fastest. But there's other forms of 5G that are sort of lower band, and that are slowly getting rolled out. And what this all means is that network power is becoming more and more efficient, more faster. This relates to Gilder's law, which essentially is the Moore's law equivalent for networks. That broadband continues to double. That networks eventually get faster, and as they get faster, that's where Metcalfe's law comes in, which essentially means that the bigger, faster a network is, the more value that it implicitly has. So those are the three laws that I think are defining modern computational advancement and modern technological advancement. And it's certainly relevant to what we're doing here in cryptocurrency and cannot be ignored. Um, oh, yeah, here's the slide about Gilder's law. But one other thing that I want to cover just before we get off is that there was also a digital money forum put on by CES, which is really interesting. They had a lot of interesting topics that you can kind of see here. And I thought it was just really comical to hear that unfortunately the keynote was led by one of the guys from the Libra team. And he essentially claimed that Bitcoin is not a means of payment. To which I retort that Libra is not a means of payment because it currently doesn't exist. So good luck with that one, Mr. Libra guy. But yeah, I think it's exciting to see this being on display, this sort of conversation being held at CES, which is that is the advancement, that is the pinnacle right now of where consumer electronics are going, but really technology in general is being displayed and demonstrated. So to have that at the forefront, to have that conversation right there, is pretty cool. So with that, we'll transition into some Q&A. All right. Oh, Is it frozen? Are we frozen? Some rough edges here. Sorry. All right. Hopefully we'll get this figured
Frozen.
out.
You're not talking about the movie that you just went to go see, right?
No, no, no. That's
Okay.
all
Hey,
right.
I wonder, is there such a thing as a
All
Starbucks
right.
law? Like, what's the density of population of Starbucks per block? Is there like a physical limit of those? You could probably study that to see
That's a good question.
how computational power is going to be tracking.
Cool.
So there's a question here. With these advancements in tech, do you think storage companies will play a huge part?
Yes. Yeah.
Cloud storage, fog storage, et cetera.
Yes, absolutely. One big piece of Gilder's law relates to cloud computing, and so as we see more and more of an advancement in IoT, we'll also see cloud computing and its ability to essentially have more computational units in the cloud, so that even quote unquote dumb devices have sort of a backend that is computationally very dense. So yeah, this is the changing nature of computation, how things are done. But yeah, certainly there's a lot of room for improvement and advancement in things like cloud computing. So yeah, it's all going to be very exciting how it sort of interfaces and overlaps with each other.
Any other questions for today? It looks like
Warren Buffett.
everybody's a little, yeah, everybody's a little burned out on the news here.
Oh yeah, I bet. Yeah, Warren Buffett just had his worst year in 10 years. So kind of tells you something. It's not with the times. Oof. Yeah, there's so one other thing I was paying attention to before we sort of stalled the market uplift through exogenous events, external, was that some of the staking coins, so Cosmos, VeChain, Tezos, Neo, were all crushing it earlier this week. So that was something I was paying attention to because we'll be seeing, hopefully in 2020, some of the first initial forays into Ethereum being staking driven. So I think as staking becomes more and more part of the narrative, those coins will, you know, potentially posit some sort of alternative to what Ethereum is bringing to the table because they already have staking networks developed and active. So they've got the head start on Ethereum. But we'll see. It should be interesting. When to sell Tesla stock? I don't know. They're doing.
That's actually one of the most difficult things that I found. Like, I think it's much easier to identify technically when to buy a dip. So, like the old traditional catch the falling knife, I think it's much easier to catch the falling knife than it is to figure out when to sell into a rising knife. Because I mean, look at the pump that we had in 2017, or if you look at some of the even the equities move into early 2018. And Tesla's a great example of something like this that's coming from a huge basing pattern into a big breakout from there. It's extremely difficult to do that. And so really the best that you want to be able to do is to catch, the meat of the move, if you will. And so right now I'd be putting my stop under 400 because that's the latest higher low pivot. But it's almost testing 500 today. So you'll give up something from there and just be okay with it because you'll never get all of the swing. You'll never get all of
Yeah, yeah. I would echo a lot of that, and just from a fundamental perspective, like you said, Tesla just signed a deal in China. I believe they're getting ready to roll out, or they've already rolled out Gigafactory 3 or Megafactory. Jeez, yeah, they're they're doing a good job of scaling. And we're about to see the Model Y come out. The Cybertruck wasn't the sort of failure that some people thought it was. It's still risky play, especially compared to the legacy automakers. But I think they're doing things that um, the automotive industry is starting to only start to try to catch up on. So yeah, very interesting plays there. Um, Doc, do you want to talk about the trading course?
Yeah, I think my by far my favorite trading course is the fractal energy trading course, because of what it does is it gives you a structure that gets away from, because all you're going to find out there is like, hey, what's the MACD? What's the RSI? Well, guess what? It doesn't really matter, because you're dealing with trailing signals, you're trailing with trailing studies. And right now, you need to learn to trade based on price. So if nobody's ever taught you how to trade based on price action alone, that's a great place to start. And then it also feeds in with the notion of market energy as well too.
Yeah. Um, Great question about allocation of tech stocks. I can't tell you how to allocate your portfolio, but what I can say is the sort of trends I see in the next decade or decades is going to be the synthesis of consumer payments or consumer payment information versus consumer profile information. So those tech companies, Google, Amazon, Facebook, Apple, Fang, basically, uh, having them synthesize what they already know about consumers just from a behavioral sense. Seeing that synthesized with financial data. Libra was just the first step. The Apple Card was just the first step. Seeing that sort of come together, that's going to be one of the biggest opportunities, I think, for tech market just dominance in the upcoming decade. But we'll see if regulators play along with it. I think they're already too big to stop it. So we'll see. Another area that I've identified is tech interfacing with $8 trillion industry, healthcare. So that's another industry that I think is really interesting. I think I talked about a couple of weeks ago how the Apple Watch study, which had like 450,000 people on board, looking for irregular heartbeats that would precede a stroke. Like that's something that's never been done before, at least of that scale. And for Apple to be publishing peer-reviewed research based off a smart device like that, sort of unprecedented, or at least in a consumer electronics sense. So I think that's another example of just how tech companies are going to start to make forays into these historically untouched or sort of underrepresented industries that are sort of lag behind, or are ripe for disruption in that way through new sorts of innovation. So very exciting stuff from that end. Other than that, as we've talked about confluence theory, IoT, 5G, crypto, all of this coming together, AI especially in the next 10 years. Any way you can interface with that, I think that's a smart play to be making. So for an aggressive portfolio, that's what I would be looking at. I would be looking at some of these companies that are building the rails of what comes next, the new digital economy. That's what I find super interesting. All right, gotta stop talking. uh, STO industry. It's not quiet. It's quiet by design, I think, and that's what sort of led people strays, that it doesn't move as fast as the ICO industry does. But it's been making substantive plays. So, for example, I would say there's a lot that still needs to be determined from a regulatory sense. But even just in the past year, it's made substantial strides in terms of its ability to prove legitimacy and sort of the basis for the technology. I still think we're about 2 or 3 years out before we start to see some real concrete action and evidence that the STO industry, is starting to take off, and that sort of the Gartner hype cycle starts to pick back up. But I'd rather be investing now. Rather be speculating during time of relative unknown, relative quiet, versus when things start to pick back up. So yeah, especially as it relates to seeing the blend of the real estate industry with the STO industry, that's where I want to be putting some of my chips in. I think that's going to be some exciting stuff.
Couple of questions on price action here. So is the higher low a sign of maybe a reversal? Yeah, we talked about this briefly. Higher low is part of the inverted head and shoulders pattern. That's a short-term reversal, but it's got a measured move that really didn't have much gas to it. That ultimately is part of a lower high on the weekly chart, which wins. So larger time frames dominate the trend. That's rule number one. Get some structure behind, because like somebody is saying in the chat room here, like you can pick any trade that you want to depending on the time frame, right? If you're just scalping short term, you're riding that short term trend up, but then it's knowing when to park it and reverse. This is where you need the larger time frames to understand what the overall character is and the context of what's happening.
Yeah. Yeah, Plus Token was a scam. I just saw an article about Hex, uh, completely emptying their main wallet or something like that. So just be careful, guys. We've talked a little bit about scams in the past, so just if it's got enough red flags to be a communist parade, then it's probably worth staying away. So, yeah.
You ought to know about that in California.
Probably. Cool. All right. Well, it looks like the chat's kind of getting quiet, so maybe we should wrap this up. But as always, guys, thank you so much for sticking around and being a part of the stream. As always, we have education and an awesome community over at our channel, or sorry, our website at readysetcrypto.com. We've got free education and lots of courses that you can get acclimated with trading, with cryptocurrency, and yeah, just staying ahead of the game and being a part of the smart money. That's what we're all about. So I'd love for you to join us, but otherwise, thank you for being a part of this channel. We love doing this stuff for you guys, and we love trying to push the space forward. So as always, it's been a pleasure. We'll see you in the next one. Cheers, guys.
See you, everybody.